Well, 32 out of 36 economists surveyed by the Australian Financial Review thought there would be a rate cut yesterday, and they, along with me, got it wrong. So, how come? Why did the Reserve Bank come up with what I think is incorrect and bordering on a dumb decision by not cutting interest rates? Why do they do it? Well, they think inflation isn't low enough and they want to see the CPI for the quarter, the June quarter, coming out on July 30. So that's one reason why they might think they want to wait and see what the real inflation rate's like. Unemployment is not high enough. That's one of the things they're complaining about. If unemployment was higher, they would need to rush to cut interest rates. The Federal Reserve in the US, it hasn't cut interest rates, and our bank tends to follow the leader, and the Fed is the most important central bank in the world. I think the board also is a bit scared of Donald Trump and his tariffs and what it might do to the world economy. So they probably are holding back their interest rate cuts in case they might need to do a jumbo 0.5% cut if the world gets really cheesed off at Donald Trump and his crazy tariffs. And then a global trade war starts and the economies of the world slow down. That's when you need a lot of rate cuts. Also, there's a belief that older Australians haven't been affected by their 13 interest rate rises. In fact, they've actually done better because term deposit rates have gone up, and these older people are spending money and keeping the economy pretty buoyant, and that's why unemployment hasn't risen. So that's another reason why they haven't cut. Also, the board possibly is actually a bunch of nervous Nellies who historically have made dumb decisions when it comes to interest rates. Now, mind you, I'd probably rate the Australian Reserve Bank as probably the second best in the world. I think the Fed is the best. We've done okay in the past, but we still have been characterised by some really dumb decisions. I won't bring up Dr. Phil Lowe. I like Phil as a guy, but made a terrible mistake when he predicted interest rates wouldn't change until 2024. And a lot of people were sucked into taking big home loans on the belief that interest rates wouldn't rise. So all those things have gone together such that someone like Paul Keating has often said the RBA, when it comes to a crisis, is always late to the party. And that's the problem. They don't see a significant crisis because unemployment is not very high. If Trump creates a crisis through his tariffs, then they will act. Uh, I should say 3 out of the 9 members of the board did want to cut, so those 3 are really smart. I could probably and I know most of the board members, so I could easily go through each one and speculate who was the smart ones and who were the dumb or nervous ones, but I wouldn't do that. That'd be defamatory. But remember this, economics is a big guessing game. I've taught economics at the University of New South Wales. I've taught treasurers. I've taught investment bankers, chief economists, and we all know guessing the economy is not easy. And these guys at the Reserve Bank tend to guess on the conservative side. I guess in the fullness of time, I hope they're right, but I think they're wrong. And that's going to be a problem for lots of people out there who are suffering. And an economy, I think, is a lot slower than these guys think. I think unemployment will eventually kick up and they'll be proved to be wrong, but we'll wait and see. On other news, Donald Trump's at it again. We saw all those tariff increases for South Korea and Japan earlier this week. And then there's a debate about the deadline. The deadline went from July 9 to August 1. And then he said on True Social, his business that he does his reports on, which brings in lots of people. He then turned around and said, oh, that deadline's not firm. And then he said, yeah, the deadline is firm. He also then slapped a 50% tariff on copper imports into the US. This guy is just seems to be making up policy on the run. And so traders on Wall Street really are at 6s and 7s. They don't really know what's going on. I'm keeping my fingers crossed that Trump actually comes up with reasonable tariffs because the market will like that and stocks will head up. I'm also keeping my fingers crossed the Reserve Bank eventually cuts interest rates. That'll be good for the stock market as well. But we are in this unusual situation where you've got this unbelievably hard to predict US president on this side, and you've got a bunch of nervous Nellies in the RBA as a consequence. We're probably not going to be made wealthy in the short term. If Trump gets it okay and reasonable, and the RBA eventually starts cutting interest rates, I think markets will go up. I think a lot of stocks that haven't been doing really well because of high interest rates will start to doing well. CBA share price will come down with a lot of the top 20 stocks. But at the moment, if things are nervous, and things are nervous at the moment, particularly because of Trump, the consequence of that is play safe. And if you play safe, you're going for gold, you're going for really secure companies like CBA. We need that to change if this market's going to go higher. If we're going to see the Australian economy rebound, we need lower interest rates. And at the moment, we're kind of in a holding pattern. And that's the problem for anyone out there who's really finding it hard because of those interest rates. We're talking about people who've got big home loans, businesses who are finding customers aren't there. And a lot of businesses have been closing up, particularly in the hospitality sector. We need to see some really good decisions made by leaders around the world, and particularly the one in the White House of Washington. That's my report. I'm now off for my walk. I'll see you tomorrow.